Welcome to the Deep Dive, where we really try to unpack complex stories and pull out the insights that matter.
And today we're diving into, well, a pretty incredible story of ambition.
Absolutely. And fierce rivalry, too, all playing out in, let's face it, one of the most dynamic economic arenas globally.
It really is. You've got Nigeria, Africa's biggest economy, nearly 200 million people, and half of them are under 20. It's like a digital Wild West, but, with its own unique flavor.
Yeah, it's not just a market. It feels more like a digital battleground where the old ways of finance are just being totally overturned.
Exactly. And the really wild part, think about 2019. Nigeria pulls in something like $747 million in startup funding across Africa.
A huge chunk of the continent's total.
Right. And over 60% of that money flooding into Nigeria. It went straight into fintech.
Straight into fintech. But here's the kicker. Despite all that cash, maybe 40 million Nigerians actually have a bank account?
Barely. It's this incredible paradox, all this investment, but most people are still outside the formal system.
That's not just an opportunity. It's basically fertile ground for disruption on a massive scale.
Precisely. That huge untapped potential, that's the prize everyone's fighting for.
And right into the middle of this whirlwind, step our two main players, Carbon and Kuda.
Mm-hmm. Homegrown challengers.
Yeah, duking it out in Lagos's fintech scene, both racing to grab those next-gen consumers.
And they came at it from totally different angles. One started small, focused, then pivoted, built piece by piece.
Calculated.
Calculated, exactly. The other just went for it, built a whole new digital bank right from the foundations up. Big, bold vision.
And the scale they've reached is, frankly, incredible. Millions of downloads, tens of millions in VC money.
Mm-hmm.
This is a high-stakes game.
No question.
So that's our mission for this deep dive. We want to unpack the strategies, the grit, the reality behind this epic battle.
Yeah, looking at where they came from, their different playbooks.
Right, the tough landscape they're operating in, the regulations, the economy, and what it all tells us about where digital banking and maybe even business strategy is heading in Africa.
And just a quick heads up before we really jump into everything we're discussing today. It's based on public sources, news reports, company statements, public records. We're aiming for a factual look at this competition.
Okay, good. So we've kind of set the scene, this amazing financial frontier. Let's get into those first crucial moves, the origins that put Carbon and Kuda on these, very different roads.
Right.
When you talk about that 80% unbanked number, it's just staggering. Because these companies aren't just tweaking things. They're basically inventing banking for millions, aren't they?
They really are. It completely changes the game. It's not how do we make banking better. It's how do we even start offering banking to most people.
Right.
That urgency, plus all that tech talent in Nigeria, and like you said, that huge influx of cash back in 2019, it just screamed disruption. The market was primed.
A massive, unexplored territory just waiting for someone bold enough to stake a claim. And Carbon and Kuda, they definitely had different maps for building their kingdoms.
Absolutely. Let's start with Carbon. Theirs was more of a calculated climb. Think back to 2012.
Okay.
You have the Dozie brothers, Chijioke and Ngozi. They launched this company, OneFi. Pretty simple goal initially, instant loans, serving people the traditional banks weren't reaching.
Humble beginnings maybe, but smart, focused.
Very. But that was just the seed. From that lending focus, they made a really key pivot.
Right, the rebrand to Carbon. That wasn't just a name change.
Not at all. They expanded the vision to become this everything bank, moved beyond just loans into savings, payments, even investments, trying to cover the whole spectrum.
And it worked, didn't it? By 2020, they had, 660,000 customers, processing huge amounts, nearly 100 billion Naira, about $241 million in payments annually.
Yeah, significant traction. But what I find really fascinating and kind of a strategic masterclass was their transparency move.
Oh, publishing their financials, that was unusual.
Extremely unusual for an African fintech back then. Carbon was one of the first, maybe the first, to put its audited numbers out there. Chijioke Dozie basically said, look, even if we show losses, this builds trust.
Trust with customers and presumably regulators, too.
Exactly. It was smart, it built credibility, but it also kind of preempted regulatory headaches down the line. Set a standard that was tough for competitors to match immediately. It became a differentiator.
And that credibility, that trust factor, must have played into their next big move in 2019.
Absolutely. Acquiring that licensed microfinance bank charter. That was huge.
Yeah, tell us about that. What did that actually mean for them?
It meant they weren't just a fintech app anymore. They were a formal bank. It gave them NDIC deposit insurance. That's the Nigerian equivalent of the FDIC in the U.S.
So Customer deposits were protected. That's a big deal for trust.
Massive. Chijike Dozie himself said their digital wallet basically became a full-fledged bank account. Psychologically, that's a powerful message in a market still getting comfortable with digital finance.
So Carbon's building this fortress of trust, brick by brick, license by license.
Right. While that's happening, a completely different story is unfolding. Enter Kuda.
Okay, Kuda, their approach felt faster, more explosive from the start.
Definitely. Think 2019 again, just 7 years after OneFi started. You have Babs Ogundai, who'd been in fintech in the US, and Musti Mustafa. They rebranded their existing startup, Kudi Money, into Kuda.
And their vision was different.
Totally different, not pivoting, but building a digital bank from zero. Clean slate. And they snagged Nigeria's first standalone digital microfinance banking license.
First. Wow, so they weren't piggybacking on anyone.
Nope. Ogunde made a point of saying it. Kuda is the first digital-only bank with a standalone license. We're not a mobile wallet piggybacking on an existing bank. They built their own core banking system, full stack.
Which lets you do things differently, I guess, like faster onboarding.
Exactly. It enabled stuff like zero-fee accounts and really quick KYC know your customer checks. You could supposedly open an account in like 5 minutes.
5 minutes?
Yeah.
At Nigeria, that's revolutionary compared to the old way.
It really was. They leveraged tech, cloud infrastructure, direct integrations with national databases, cut out all the usual friction.
So how did they achieve that speed technically? Was it just better tech or different processes?
It was both, really. Designing the system for digital from day one, using modern cloud tools for scalability and speed, and streamlining identity checks by plugging directly into official databases where possible. Less paper, more automation.
Got it. And their pitch to customers was pretty aggressive too.
Oh, yeah. Free debit cards, no monthly fees, easy budgeting tools. A very attractive package, especially for younger people.
And they had the money to back it up.
Big time. They raised serious venture capital, about $36.6 million total by 2021, including a huge $10 million seed round, which was a record then, and a $25 million Series A.
Wow. And did they raise even more later?
They did. Mid-2021, a massive $55 million Series B round. That valued them at $500 million, one of the biggest fintech raises in Africa at the time.
And that kind of money fuels incredible growth. What were their customer numbers looking like?
Reportedly hit 7 million customers by early 2024. Just explosive growth. That VC money was like rocket fuel for their whole growth-first model.
Okay, so two very different journeys leading to this point.
Right.
Which brings us right to the core, this strategic showdown. Carbon, prudent, maybe profit first. Kuda, aggressive, growth first.
That sums it up pretty well. Carbon built directly on what worked their lending. They monetized that early.
Right.
Then they carefully added other pieces, savings, payments, tools for small businesses. Their expansion felt very deliberate. Spend what you need to grow steadily, make sure it's sustainable.
And they're still innovating on that sustainable path, right? Like with Carbon Nexus.
Yeah, late 2024, that's their AI-powered toolkit for businesses, came after they acquired Velo Finance, an SME fintech.
So integrating acquisitions to strengthen their offering.
Exactly. Carbon's COO called it a no-brainer, deepening their SME focus. By 2025, Ngozi Dozie was talking about their 4Cs: clarity, control, convenience, confidence, really hammering home reliability.
And they back it up with those public financials.
Yeah.
Like showing that $17.5 million revenue in 2019, up 68%. Proof that the model makes money.
Right. Now contrast that with Kuda's approach, the blitz scaling bet.
Silicon Valley playbook, basically.
Pretty much. Pouring money, hundreds of millions of naira into marketing, subsidizing transactions, just grabbing users as fast as possible, market share above all else initially.
But that costs a fortune, doesn't it? Burning cash like crazy.
Oh, yeah. That kind of growth comes with heavy losses. Reports mention, a $14 million loss for Kuda in 2021. They were pushing things like big overdrafts to keep users sticky.
So how sustainable is that long game for investors, especially when a market's volatile? Does the pressure mount?
It absolutely does. Kuda's CEO, Ogunde, has been pretty open about needing to, stay close to existing and potential investors, keep those funding options alive. The argument from Kuda's side is, get the scale first, get millions of users, then figure out monetization through lending, remittances, merchant services. Bet on those network effects kicking in.
But have they started to shift that thinking at all? Or is it still full speed ahead growth?
Well, there have been signs of adjustment. Around mid-2022, they reportedly cut back on marketing spend.
Oh, interesting. Did growth stall?
Surprisingly, no. They apparently still added like 1.5 million users in a few months, even after cutting marketing. But they also started tweaking loan products that weren't working well and launched POS terminals for merchants.
So a move towards revenue, even if growth is still the main focus.
Exactly. A sign that even blitzscalers eventually need to show a path to actually making money. It's a subtle pivot, but it's there.
Makes sense. And of course, this whole fight isn't happening in some isolated lab. They're dealing with real-world pressures,
Ah.
regulations, the economy.
Absolutely critical factors. Both operate as licensed microfinance banks under the Central Bank of Nigeria, the CBN. That license is key for credibility and that deposit insurance we mentioned.
But the CBN isn't just sitting back, right? They're active.
Very active. They've been tightening things up. Late 2023, they lifted the ban on banks dealing with crypto. They've overhauled rules for agency banking, and they seem to be licensing startups more aggressively now.
Like Kuda getting those remittance licenses abroad.
Exactly. In Tanzania and Canada, the regulatory landscape is constantly shifting, and these guys have to adapt fast.
And then there's the economy itself. Nigeria's had some rough patches. High inflation, the Naira's value.
Huge headwinds. Inflation shot past 25% in 2023 and 2024. The Naira lost, what, over 40% against the dollar in just a couple of years?
How does that even work for a digital bank? How does it hit their actual business?
It puts immense pressure on their unit economics. Inflation eats away at savings value, makes loan repayments worth less in real terms, and the devaluation. That makes it really hard to show real growth if you earn in Naira, but your investors think in dollars.
A constant balancing act.
Totally. Plus, you've got political uncertainty, things like foreign exchange controls, fuel subsidy changes. It all creates volatility that hits consumers, which hits the banks.
Wow. It sounds incredibly challenging.
Yeah.
But is there an upside to any of this volatility?
Well, one massive area is remittances. Nigerians abroad sent something like $100 billion back to Africa in 2022 alone.
100 billion. That's enormous.
It is. And Kuda getting those licenses in places like Canada, that's clearly a strategic play to grab a slice of that huge lucrative flow.
Turning a challenge, or at least a macro trend, into an opportunity.
Exactly. And you also have the CBN itself pushing things like digital IDs, the INERA pilot, API mandates, all aimed at financial inclusion, which fundamentally changes the banking landscape these companies operate in.
Okay, so this environment, it's tough, but also full of potential. Which brings us to the people they're trying to reach. How do they win over this new generation, and how do they build trust?
Yeah, that's the core of it, isn't it? The fight for the youth. Millions of young Nigerians, smartphone in hand, born after 1990, they expect something different.
So how do Carbon and Kuda appeal to them differently?
Kuda's branding is very much the money app for Africans. All about seamlessness, free banking for everyday stuff, easy remittances. The promise is pure, frictionless convenience.
Makes sense. And Carbon.
Carbon leans more on the tech, yes, the AI tools for business, the credit scoring, but also heavily on trust and accessibility. They push the CBN license, the stable funding, the careful growth.
And they make sure people without the latest smartphone can still use them.
Right. They have the iOS app, sure, but also USSD for basic phones, even social chat banking, reaching lower income segments too. It's a broader accessibility play combined with that stability message.
So for someone listening, trying to understand how you build trust in a market like this,
Yeah.
it sounds like two very different philosophies at work.
Completely different. Carbon is almost leveraging traditional signals of trust, the family name, the formal license, the audited results, but applying them to a modern digital platform. It signals safety, reliability.
Sort of like we're new, but we're built on a solid foundation.
Kind of, yeah. Kuda, on the other hand, builds trust through radical ease of use and transparency on fees or the lack of them. Their reliability comes from the app just working instantly every time. Plus responsive customer service. They're betting that a superior user experience itself builds trust with a generation that values speed and simplicity over maybe older institutional signals.
Fascinating contrast. Okay, so boiling this all down, for someone thinking about business strategy, maybe an aspiring entrepreneur listening in, what are the big lessons here, this whole Carbon versus Kuda story?
Well, first off, Carbon really shows how transparency can be more than just ethical. It can be a powerful strategic weapon. Publishing those financials, even the tough numbers, built a kind of trust moat.
Yeah, that's a great point. What else?
Then there's that classic growth versus profit dilemma, right? Kuda's blitzscaling versus Carbon's steady monetized growth. It's a perfect case study of when you might choose one path over the other. There's no single right answer. It depends on the market, the funding environment.
Context is everything.
Exactly. Third, adaptability. You just have to be nimble in markets like Nigeria. Inflation, currency swings, new regulations. Both companies show how you need to react, pivot, and crucially, spot opportunities amidst the chaos, like remittances.
You can't just stick to the original plan rigidly.
No way. Fourth, don't underestimate the power of proper licensing and regulation. That microfinance bank charter wasn't just red tape, it was a badge of credibility. It reassures everyone, customers, investors, that you're legitimate and their money's safe.
Hugely important.
And finally, it all comes back to the customer. Both Carbon and Kuda are laser-focused on serving the underserved, but their methods differ. Kuda's zero fees and slick onboarding, Carbon's broader service range, and SME tools. Solve a real problem, but do it strategically.
Okay, so fast forward to now, 2025. Where do they stand? It feels like both are established players now.
Definitely local leaders. Kuda is probably still pushing hard towards profitability, maybe fine-tuning that model. Carbon, given their approach, is likely closer to breaking even consistently, maybe already profitable.
And they each have clear strengths moving forward.
For sure. Kuda has that huge user base, 7 million people, and that super popular app that's massive potential. Carbon has the diversified products, that careful culture, which might be more resilient, and a strong, growing SME focus, which could be a big revenue driver.
And the story's not over. Rumors of expansion for both. Kuda looking at other African countries, Carbon going deeper with business tools.
Yeah, the ambition is still clearly there for both, which makes you wonder.
About the next big exit. Nigeria's seen some huge ones. Paystack selling to Stripe, MoneyPoint's IPO, Flutterwave becoming a unicorn.
Exactly. Could Kuda or Carbon be next? It really poses the question.
So looking ahead, how does this play out? It feels like a David versus David situation in a way.
It kind of does, and the winner might not just be the one with the slickest app or the most funding right now. Ultimately, the winner is probably the one who really cracks the code on trust, builds a model that can weather any economic storm, and fundamentally solves that banking problem for the huge chunk of Nigerians, that 60% still waiting to be brought into the system.
As millions more potentially open their first accounts, the stakes are just immense.
Immense.
So, the final thought for everyone listening. Will it be Carbon's steady, cautious build, or Kuda's bold, high-speed charge that ultimately defines the future of digital banking in Nigeria?
The answer is going to shape financial services not just there, but likely across the whole continent. It's a fascinating watch.
You've been listening to Empire and Legacy, African Business Chronicles. Our hosts are Zuri Mwangi and Kwame Adeyemi. If you enjoyed today's episode, be sure to follow us on LinkedIn, WhatsApp, X, Instagram, and YouTube. All links are in the show notes. Subscribe to the podcast on Spotify, Apple, or your favorite podcast platform, and share this episode with fellow business leaders. We're back each week sharing more stories about the exciting business rivalries shaping the future of business across Africa. Empire and Legacy is essential listening for business professionals and leaders. Be sure to subscribe to be the first to know when new episodes are released. Until next time, stay tuned.